As usual, thank you to everybody that continues to support these efforts that I do daily with different thought leaders. I've been tracking Peter for a while. I'm glad we got him on today's space. This will be available on all your favorite podcast platforms under that Lead Lag Live banner, as well as available on YouTube. With all that said, my name is Michael Gayed, publisher of the Lead Lag Report. Joining me for the hour is Peter Spina of Gold Seek, Silver Seek. Knows a lot about gold and silver, which we'll get into. But Peter, for those who are not familiar with your background, introduce yourself. Who are you? How'd you get so interested in the precious metal space? And what are you doing with your websites?
Sure. Well, thank you for having me on today. My background in precious metals started off at a very young age. I got introduced to precious metals from my parents, who are immigrants to the United States, who fled a communist system and had some background in black market currencies and currency devaluations and the value of precious metals. So at a very young age, I started to be introduced to investing when I was an early teenager. Bought my first equity, followed by the first precious metal, gold, silver, and mining stocks. And it was around the same time that the internet was just starting to get a little more popular in the public side. So I was also pretty fortunate to be introduced to the internet at a young age. And just when it went from a text-based version of the internet to a graphics version, I started a few different websites, but one of them was focused on gold. And from there, the site grew into one of the largest gold and silver investment websites on the web. So we've been around since 1995, probably one of the first, if not the first, gold investment sites out there. And I've been following it from back then as a teenager and interested in the precious metal sector to now where it's a full-time involvement in investing and following a lot of the junior sector side and the precious metals markets. And so, on Gold Seek, Silver Seek, we cover with various contributors of the sector. So we have different opinions. So I get the pleasure of following what the different authors in this sector are saying about what's happening right now. And I've had a pleasure to also just over the last almost 25 plus, almost 30 years in the sector to follow the leaders in the sector and how they view gold and how to invest in the sector and so on. So just a little bit about my background there.
So I'm curious about the differential in page views. Do you find that more people are interested in gold or more interested in silver?
Gold is more popular, but silver has its a lot larger, these cycles where it gets extremely exciting and then it just crashes. So at the peak in 2011, silver was actually more popular than the gold side for a short period. And then when we kind of bottomed out and about several years ago, it was a huge 80-90% crash in interest. And a lot of that was also subverted by the interest in cryptocurrencies. There's a lot of the original crypto investors and speculators came from the silver and gold side. And that really, I think, impacted the silver side more than the gold side. So when the crypto side really got going, that I think siphoned a lot of interest from the silver side even more so.
Yeah, I just think it's interesting that page views can almost be seen somewhat as a contrarian indicator, right? Which makes sense, right? Everyone gets excited on investment when it's rocking. When you look at the visitors to both sites this year, has there been any kind of pickup? Have things been sort of steady state? I'm asking that because I want to get a sense of if there's any turning point in interest, right, around the metals raw.
Mm-hmm. Well, there was definitely a lack of interest coming into the summer period and into the bottom of the market. So you do see a quite strong correlation. Sometimes usually you see the price running up first before the page views start to kick on. And I think that's what you're starting to see now. You've seen a lot of interest spike in the last weeks as people are starting to wonder what is going on. Why did silver go up 25+% recently? Why is gold starting to move? It was supposed to keep heading down, and all of a sudden these mining stocks are starting to take off. So you do see that sentiment and people, the kind of a little bit of that herd mentality following the price. And so now it's been over about a month. The traffic has been way up. There are some days it's 20, 30%, 50% up. And when it's really active, you can see double or more. So, but that's coming off a pretty low base. The sector has gotten so decimated. People have been in this, the gold price has been 2+ years in this downtrend consolidation phase and just really just kind of just puked into this low months ago, and people have just given up. And the bull market, well, I believe we're in a bull market still in gold. I think it did a great job of kicking a lot of people off right at the bottom. And, the sentiment was just absolutely horrible, even more so with silver. And all of a sudden it's like, wow, okay, maybe we were wrong about it. And now there's a sudden, interest back in the sector, especially now that we're seeing other sectors and other hot markets come off their highs. And in the case of crypto, boy, that's been a massive crash.
So, it's interesting to me. Correct me if I'm wrong, but my sense is that crypto, attracts a much younger audience than gold, right? And that if you were to do a Venn diagram, there probably is not that much overlap because of just kind of average age groups. I know that's a line that's been out there quite a bit, that, one of the reasons gold maybe hasn't gotten as much attention is because crypto was kind of eating its lunch for a while up until this, last year and a half or so. Do you find that there's truth to that, or are they largely kind of separate types of investors?
There's overlap, but there's definitely some silver investors that really aren't that interested in gold. The silver sector tends to attract younger individuals. Gold sector, traditionally in the West, from the Western perspective, you see a lot more of the baby boomer retired kind of individuals. And that's certainly not the case in China and different parts of the world. But in the West, yeah, silver attracts a much younger audience, and they see a lot more of an appeal, and not just from the monetary side, but more from, well, right now the EV demand and the energy metals and the green energy revolution and that side. And of course, the price is maybe 1/80th of the gold price right now. So they see a lot more upside potential than the gold price.
One of the other things you often hear about is, I hate to call them conspiracy theories, but maybe there's some element of truth to what people would see as extreme. But these stories around, purposeful suppression of gold prices, and I hear actually quite a bit about that when it comes to silver. I'm curious to hear your thoughts on why is it that gold in particular the last decade hasn't really done all that much, and if there is some kernel of truth to some of these, what to the layman might be sort of outlandish theories around why the price has been suppressed or lower.
Well, we've definitely seen through the course recently that there have been major bullion banks involved with spoofing the market and messing with the price through the futures market. But what we have seen is really highly concentrated short positions, especially in silver. It's the most highly concentrated short position of any commodity. And you have very few players that are highly short the market. And that's a very dominant effect. So they have a very strong influence on the price, which allows them to maybe play around with it more than other markets. And I think that works okay within a certain range over a certain period of time, but price manipulation never succeeds in the long run. I mean, the U.S. government was involved in gold price manipulation, and it fell apart on them when they had to break the U.S. dollar link to the gold price twice, once domestically and then eventually under Nixon internationally. So any price suppression, if there is going on, I believe there's paper games and there's larger players taking advantage for sure, the small retail guys, and we just saw it again recently. We saw a huge short covering in the silver price. There was a lot of these large specs hedge funds that we saw in the COT report. We saw them really shorting the silver price and gold price, and now they just got smoked out of the market again. Yeah, the bullion banks covered, and then they got caught short these small specs, and now you saw what happened. They got really taken for. So I guess I don't think it's a free market. It's silver is a very small market, and it's easy to push around the small retail traders. So over the shorter to midterm, there's some games that goes on, and hopefully that becomes less of a factor as the gold and silver markets become more global, and the pricing power is taking away fully from the Western markets, and you're starting to see more influence coming from other parts of the world.
Let's talk about that point you just mentioned about shorting, because there was I think it was a moment earlier last year where it was on Reddit, this push for a silver squeeze, kind of a GameStop type move, right? Everyone was hoping for, thinking that would happen. Is there any sort of real hard data around how much silver and gold is actually on the short side? Because I got to imagine it's hard to get that kind of information.
Yeah, it's very difficult. There are those who speculate using the quarterly bank reports, what kind of short position there might be. There's one author, Ted Butler, who likes to follow these reports, and it's his estimation that in the silver side, and he believes it might be Bank of America is quite heavily short by hundreds of millions of ounces, that it's been lent out to them by JP Morgan. So, JP Morgan might be long, and then you have Bank of America short on the other side. The silver market, I think you saw more of a short position, when the price was in the mid upper 20s, they were shorting it. And then on this price drop collapse down to, boy, what did we get? 18, $17 an ounce there. They were covering their shorts quite aggressively. So the internals of the market look a lot more favorable. The bullion banks had covered. They're in the most bullish position we've seen in years. So that's not a problem right now. But back when the price was rising, they became quite confident that it was a good time to go heavy short.
I think the challenge that a lot of retail and allocators have is it's always a question of why now, right? I mean, after such a prolonged period of lack of real momentum and other investments going through bigger amplitudes, right, in terms of just booms and busts, is there anything that you can maybe point to that is a catalyst for sort of a longer term momentum trade in precious metals? Or is it one of those things where what is usually the case, which is that you don't notice a cycle's changed until 2 to 3 years afterwards, and the catalyst is only known with hindsight?
Yeah, I think a lot of people are missing the turnaround right now. I believe the bottom in the precious metal sectors were hit. Silver seemed to have hit it before gold did some months ago in the precious metal stocks. And so we may be looking back a year from now and realizing that was the bottom, that the cycle has shifted. That one of the authors on our site likes to follow the 8-year cycle in the gold market, which was coming due in 2023, I believe. And in his estimations, we've already hit it, and that we're entering back into this bubble phase in the precious metals side. Now, what would drive it fundamentally and what supports this case, I think, is a more common view that the general economy is going into a period of stagflation. So of all the situations that can happen out there, stagflation is the most beneficial to the precious metals prices, because the economy is barely growing. You've had all these asset bubbles that have just been pumped up by all this easy money, cheap credit over the years. And that trend has changed as well. This era of super low rates and this high level of speculation that appears that now has ended. So now the question is, where do you hide? And even with bond rates where they are right now, and it has been kind of, it hasn't helped gold right at this moment, because you have short-term yields that are quite attractive, and those who look at it from the same perspective I do, but they see you can get a nice quick short-term yield on your dollars right now, and gold's not yielding you anything. So they're kind of stuffed in short-term treasuries and looking at other stuff. And you've seen outflows from the ETFs and so on. But everyone's kind of looking ahead. And I think now there's a sense that, well, okay, the Fed's going to stop eventually raising rates. And then what? And then what is the new economy? What are things looking like in the coming years? Do we just have a brief 1-2 year spout of inflation, or is inflation embedded? And is it going to continue to last for the next 5 to 10 years? And if that's the case, where you have slow growth and high inflation, that's really beneficial to gold. And that will drive a lot of interest into the gold market in the coming years.
How have ETFs impacted gold price movements? Because I think there's a legitimate argument out there that the financialization of gold and different ways that gold can be accessed maybe was sort of a warning sign of a period of stagnation for a while. I mean, oftentimes Wall Street will come out with products after a cycle has already favored the product in a new wrapper, right? Which makes sense, because that's where the demand is at that moment, but it also kind of becomes a contrarian signal.
Yeah, well, they've been around for the last almost 2 decades or so. I mean, it was quite the
GLD, yeah,
GLD, and then the SLV came out with almost exact same amount of ounces, or the exact same amount of ounces that Warren Buffett used to hold back then before he sold out. Yeah, so I think they amplify the moves, especially in silver, a lot more. Gold is a much larger market, but they have, I think, what we saw in this last quarter, which was very interesting, huge demand, record demand from central banks buying gold, and then you had a huge outflows in the ETFs. So you had a really positive and a negative there. The ETFs kind of just represent more of the Western investor sentiment. They're chasing other things right now. They just kind of chase the price and they'll come back around to this market. But for right now, they've been kind of it's been pushing a negative pressure on the price. So I'm kind of surprised. I haven't actually looked at the last week of the ETF data, but usually you kind of get a sense of how the markets the gold and silver price are doing and the sentiment through those products. What I have noticed is that the big price jump in the last several weeks, a lot of it was fed by short covering. So if we want to see the price sustain its rise, then we're going to have to see the ETFs continue to see inflows. But we did see retail demand and coins and bars quite strong. It's just the ETFs are weak at the moment. So the Wall Street crowd right now doesn't seem to have much of an interest in precious metals.
But governments do, right? I mean, you're seeing more and more, I think, headlines around different governments kind of stacking more. Just talk about just some of the changing trends or maybe accelerations that you're seeing when it comes to countries accumulating gold in general.
Sure. Well, yeah, I think it's a huge factor in the market. When I started investing in gold, there was a supply deficit. There was in the mid to late 90s, you had mostly the European central banks. They were dumping their gold reserves, and the gold mines were closing down, and the supply was being fed by these excess central bank supplies. Now, for the last many years, central banks are buying and accumulating. They've got to be well over 30,000 tons now in aggregate. So their last quarter was the historical one, which was almost 400 tons of gold in one quarter, which is about 20 some billion dollars, which is a significant amount. But compared to the amount of money creation that has been going on, it's peanuts. So from a relative perspective, it's not that much. You see huge demand. Well, we saw various central banks accumulating gold, but some of the major ones have been China. Russia has been accumulating heavily, although I don't know in the last several months, what if they've had to shed some of that to raise some cash or whatnot. And there's another discussion about what they plan to do with gold and how they may use it, and the whole BRICS situation as well. But China has been one of the major buyers out there. That's something that's still going to come into play. We've already had some comments from China regarding gold, how they plan to use it. They mentioned it's an important part of their future. So, gold is going to play a very important part in the new empires emerging. Basically, I mean, I think China is maybe not talking about the next years or next 5-10 years, but China's obviously is rising here, and they want to compete with the U.S. dollar, and they need to do certain things to get there. So gold has been under accumulation by the central bank there for some time. And we don't really know the true figures. There's those on GoldSeek that have estimates that their true holdings are many times more what they say they are. And then you have they've also been encouraging the domestic demand. The private side has been accumulating a lot of gold. And what I had mentioned earlier about compared to the West, you see a lot of young Chinese buying gold. It's trendy. It's more exciting. They banned the crypto side there, so they've been diverting more of that demand into gold and encouraging that. So that's quite a different feature. And then, of course, in India, that's always been a huge demand source, although there's some different issues there. And the Indian central bank as well has been accumulating. You see some other banks accumulating. Turkey has been buying a lot of gold. You see also, and I live in the Czech Republic here, they just put on a new central bank chief. He's talking about selling their huge euro positions and buying dollars and gold, a couple hundred tons of gold. So Eastern Europe, Central and Eastern European countries, you see a large gold buying, Poland, Hungary. So it's quite diversified, and you're getting also demand from rich producing countries, which also have a strong gold buying tradition.
Yeah, and it's interesting, right? Just as you're talking, I'm thinking this through myself. It seems to me that if we're in an environment of deglobalization, if we're in some kind of longer secular cycle of deglobalization, the pendulum swings. Well, why would deglobalization take place? Because there's lack of trust, so whether it's because of supply chains or political issues, whatever it is. And fiat is entirely based on trust, right, of a currency. So I can make an argument just in listening to you. I want to hear your thoughts on this, that the catalyst is actually the deglobalization. Right, it's the realization that it's not just a function of fiat can't be trusted, but the governments are not trusting each other with their own fiats. It's not just the citizens with their currency; it's the currencies to other currencies.
Absolutely. I wrote one note for today's interview, and I wrote gold is trust. So it is one of the key aspects of why, whether it's a private individual or a central bank goes to it. And it's kind of, it's funny to hear Jay Powell remark about gold. I don't know, about a year ago, he was asked about it, and he said, why do you hold gold at the Federal Reserve? He says, well, it's tradition. Why do central banks buy gold? He says, well, it's out of speculation. And it's absolutely ridiculous to say that. It's about trust. And fiat needs confidence. And we're in a fiat bubble. Central banks went crazy again, even more so in this last cycle during COVID. There's a lot of issues out there now with the deglobalization side. Yeah, now when you start getting to the national resource nationalization and breakdown of trust and this colder war, that's uncertain how this still plays out. Like with Russia, I mean, it's to me, this is worse than a proxy war. This is almost like World War III at this point, direct engagement. So you have a lot of uneasiness in the world. You have a lot more national interest taking place, and gold plays an important part of that. When it comes down to it, gold is the unit of trust. It is the king money. It is the global currency. It has been for thousands of years. And even though it has been demonetized by governments in the past decades, especially, with the dollar breaking that finally in the 70s, that gold hasn't been playing as active a role, but now we're starting to see hints of that returning. So it's quite telling that central banks are accumulating this quote unquote speculation in the face of everything that's going on, that they would not say be accumulating dollars, that supposedly dollars so strong. So why aren't they buying that? And in fact, they're de-dollarizing. The Forex reserves of the dollar were below 60%. I think it had an uptick the last quarter up to like 59 some percent, but the trend has been de-dollarization. And I don't think the dollar is just going to go away, but if that trend continues, which it looks like it will, gold becomes more of an interesting asset to hold and in a way to protect the value of the reserves. And especially for central banks now, they're sitting on large losses. If they were to mark to their balance sheets, they're sitting on some tremendous losses there. So there's all kinds of other problems there.
All right, let's get into analyzing mining stocks, either on the gold side or the silver side. First, talk through some of the sort of idiosyncratic aspects of analyzing gold equities versus silver equities versus other equities.
Well, it's a lot more. It's a higher risk sector with higher rewards, which, well, you should be getting higher rewards if you're going to take this level of risk. When you invest in mining stocks, a lot of these mining companies are not just producing silver. In fact, something like 70% of the silver supply doesn't come from primary silver producers. They come from base metal producers that have silver as a byproduct. So actually, there's very few primary silver producers, but silver producers producing silver, lead, zinc, base metals along with their primary product. The silver stocks, in some ways, primary silver producers have a better niche in that there's not so many choices. So when you do buy a silver stock, there's a very small handful to buy from, whereas gold has a lot larger selection. But, recently, like right now, the price of silver came down below or towards their production costs. For a lot of miners, actually below it when it fell below $20, $18 an ounce there, which made it a lot more difficult for them. Whereas gold companies still had, for the most part, still have some profits, margins left. So I think silver miners carry a little bit more risk, they're more volatile, like the price of silver is. It's definitely more volatile than the gold price, but there's a lot more upside. And when the market really gets going, then those silver miners and silver exploration stocks carry greater premiums than gold stocks do. And within the sector, you have different kinds of companies to invest in. You have the kind of household names, the very large senior producers, the ones that are producing millions and millions of ounces a year on the gold side. And then there's a junior side, which some of these smaller mines are producing 100,000, 50,000 ounces a year, and some exploration development stage projects and real grassroots exploration. So there's all sorts of different parts to investing in that. And as well, there's the royalty companies, which actually is a pretty great way to reduce your risk in the sector. But your upside is limited when the market does move to the upside.
And of those different types of companies, those subgroups that you mentioned, which are, just from your vantage point, starting to show some more interesting behavior, or maybe are fundamentally going through a bit of a renaissance? Where do you think people should be focusing their research efforts on?
Well, it depends on your risk profile. You've got to have a longer term horizon with these stocks and a really strong intestinal fortitude, because these stocks can go through some wild swings. The GDX, which is like the ETF for gold mining stocks, the larger gold miners, they lost half its value from the spring of this year until late part of this year, which was absolutely ridiculous. It totally just got oversold. So it was a lot easier to buy the larger miners the last several weeks. There's been a nice, you've seen a lot of them go up 50% or more. Some of the mid tiers and so on that just got totally destroyed. So that was easier to buy last several weeks. I'm a little bit cautious right now, short term. The prices have had a nice big bounce, as they should have. So I'm looking for a bit of a pullback to rebuy some of the positions in the trading account. But I am mostly 100% in for the long term right now. I believe that we're starting the next phase, that the biggest potential in the sector is going to come from the junior side, the exploration side. Although, again, I think in the short term, I think the lower risk and easier money was in the mid to senior side companies. But you've seen a lot of these juniors and exploration stocks fall 50, 60, 70, 80% from their highs, just absolutely destroyed over the last 2+ years. Capital has fled. The markets have been illiquid. You've had some of the tax selling, which maybe now it's being kind of, maybe mostly the pressures are over because the sector is starting to kind of move now. So I see the biggest potential in the small caps. And a big part of that is that the deposits are being mined by the senior producers, that they're just eating through their reserves at a very aggressive rate. They're not replenishing them. The sector has been underfunded for many decades. You just have a very volatile sector where you have these periods where the market is doing well, so you get some inflows of capital. They get in, they invest it into exploration development, and then it quickly turns off, and then nothing happens for years. And over the past decades, it's especially the last decade, it's just been underdeveloped, underexplored. So it's inevitably going to get more difficult for the larger producers. So I'm not as favorable to the senior producers because they've got more of a challenge to replenish those ounces, whereas the juniors, the smaller mid tiers, and the exploration guys who are coming upon discoveries, they're be sitting in a nice position from the senior producers who are going to want to make a bid for them. So likely see more consolidation in the sector. And the interest is in the smaller side. But you have to be careful on the timing of this, because if you do get in too early, and if you're in a bear market for too long, the junior side is very susceptible to dilution. So you can get diluted out pretty quickly in an exploration project if it's going on for years and years, and the company is unable to get attractive pricing in the market for their share price. So you can just see your position get diluted. So it can be quite challenging, and it's very high risk. My suggestion is to diversify those risks among more of a basket of exploration stocks. If you have, say, like 10 companies, and if you can get 2-3 really nice big winners in a bull market, they should make up for the other ones that perform as well. But at this point, if the sector's really turning, if gold's going and back up towards 2,000 high and above next year, even though it might take some corrections and so on to get there, these stocks have just been so beaten down. It doesn't take much for it to double or triple and still be down from its highs from a few years ago. And we've definitely seen just an absolutely just giving up on this sector into this summer, and at the end of the summer, when it finally just kind of capitulated with some of these really nice producers just being sold for nothing. So I love that. I think from a longer term cycle, you do get these opportunities. Sometimes you make more money trading it. But when the trend changes, which I believe now we're into a new trend in the gold silver markets, you don't want to be playing that game too much. You can get some really big quick moves and then a pullback, but you want to be careful. And also you don't want to be trading on margin and leverage, because there are such big swings. It's really easy to get taken out of a position, and it is a small sector. So you do have larger players that can mess with the smaller players.
For the remaining estimates, everybody please make sure you follow Peter here on Twitter. Check out goldseek.com, silverseek.com if you're interested in learning more about the space. And this will be available as a podcast fairly soon under that Lead Lag Live banner. The point about dilution is interesting, and it's probably a nuance that most people don't really think about when it comes to investing in the space. And the volatility, to your point, is what keeps people away, right? Because increasingly people are short term and they don't view volatility as an opportunity. They view it as a reason to avoid when the volatility goes against them. Are there certain cycles or environments where the mining stocks tend to have lower average volatility as opposed to just the kind of higher volatility that scares people away? I'm trying to get to the question of under what conditions is that risk relatively less than before it was?
Well, at the end of a rate hiking cycle, usually that's when you see the best performance. So if we're nearing that part of the rate hiking cycle now, the end of it, I believe we're going to see this quote unquote Fed pivot. My version of the Fed pivot isn't the same as other people are saying. I think we're just going to see the end of rate hikes. I don't think they're going to start cutting rates or anything right away. But that's when the gold price and then the mining stocks do quite well. It's the dollar comes into play and all that. But I think if you just look at the fundamentals of the sector, and you have to be selective on the mining stocks because some of them have had real big problems with their production costs getting out of hand. And it is a pretty good indication about inflation because inflation tends to show itself right away in the mining cost. It's very energy intensive, labor, commodities, all of that, all these inputs into the mining side. The inflation really shows itself as fast as, and we've seen a lot of the miners see 10, 15% or more percent increases in their production costs. So that's been we had the gold price run up in 2020, had this really excellent period of really big margins for the mining stocks. So they were coming out of a period of 10 years of this down trending gold price, which almost hit $1,000 an ounce. And the production costs back then were, around $1,000, $1,100, $1,200 an ounce. So it was really a difficult period for the gold miners. They were able to turn that around through more prudent management. There were some pressures by some of the large investors in the sector to rein in some of the costs, to be more careful on what they're investing and spending money on. So that started to really show itself last year's, and then the gold price took off in 2020, and from low 1,000s almost to over 2,000 briefly. So the margins for these miners got really good, and then they started to get compressed here in the last year or so. So now, as we see the expansion of profit margins again with the rising price, I think that's when the miners now will do quite well. And I think they've lagged so much and they've been just left for dead that it's really easy to see there's good value. Although, again, a little caveat is, we did have this nice run up the last several weeks. So short term, you got to be careful because it does tend to overshoot as well. It can overshoot to the upside in the short term as well.
How is leverage, broadly speaking, in the mining space? I mean, I have to assume that they're relatively leveraged in terms of the debt loads. Is there a fair characterization? And at what point from your own research is there maybe a risk of sort of refinancing with higher interest expense?
Yeah, for the larger miners, and I don't follow them as closely as I do the junior one. A lot of these guys tend to finance these mines now, not with just debt as much as they use different methods. Share dilution is sometimes one of the aspects, but they use a lot of times they sell royalty on the project so they can avoid the debt burdens by whether it's Royal Gold or Franco-Nevada or some of these large royalty companies will give them a nice percentage for 1, 2, 3% or usually 1 or 2% NSR, and that's smelter royalty on the project. So that helps to avoid the burden of the rising cost of the debt costs. But that will be more of a challenge for sure to finance and to, I would expect more mining companies trying to avoid that because the cost will become prohibitive if you're going to have to pay several percent, what they're getting charged right now. It's not favorable. So they'll have to look at other means. And if their share prices start doing better and better, you'll see more bought deals or you see more money coming into the sector through that means. But for the junior side, they tend to use share issuance to raise capital. And then, they will use some, if the project's developed enough or they're desperate enough, they'll sell off NSR. But you don't want to see your project chopped up like that too much, or else the margins on these mines aren't always the best. So if you're giving 2%, 3% of your NSR away, then your profits down the road when the gold price isn't doing so hot, it's not going to be so good either. So there's a lot of parts to take into consideration. But the junior guys, yeah, and they do have their lines of credits and so on. But I think that is a good question. Now, how are they going to deal with now the rising costs? So they better see a better share price, or else they're really going to be in a difficult position, or they just delay development of projects.
So one of the things I found interesting, Peter, as we were DMing, is you mentioned that you actually spent quite a bit of space, quite a bit of time learning about cryptocurrencies and the crypto space. I think you said from 2015 to 2017. What was the initial impetus for that, and what got you back to the conclusion that maybe the hype isn't worth it relative to the sort of historical precedent of gold?
Yeah, so I got to first say off that I know quite a few of the early adopters or the early crypto guys that came from the precious metal sectors. I was introduced to Bitcoin in 2011. I mined it a little bit. I started following it, but it wasn't until like 2014, really into 2015, that I really dove into it. And I actually sold off some gold and silver to buy some Bitcoin back then. And I really immersed myself into that space. I had moved out of, I had been living in Vancouver, Canada for a few years at that time. And then my wife and we moved to the Czech Republic. And in Prague, there's a neat little, it's called the Crypto Anarchist Institute, where they have kind of this ecosystem where everyone's using crypto. So use Bitcoin and Litecoin to pay for your office rent and for your food, your coffee, and other services. So it was kind of a nice experiment to spend some time. I spent about a year doing this and getting to know a lot of these individuals that are involved in this sector. And back then, it was just a lot of hope and what potential this sector could become and what it could be. My hope back then was that Bitcoin could compete more with the monetary monopoly out there, with the fiat one and the payment network side. And what started to become apparent in the 2016-17 bubble was there was a lot of altcoins came around, and I got sucked into some of those, made some big investments and invested into exchanges, and I got really heavily involved. I mean, I pretty much almost gave up on precious metals at that point because it had gotten into this dull phase where nothing was really moving it and didn't really have, it was just in a consolidation, a bear market phase. So for me, crypto was an interesting time to look at what could there be as far as maybe innovation. I thought that maybe this merging of technology and money is creating something new and interesting. And there are some aspects of it that I do like, but as far as what it got turned into, which I talk about, it's a casino. It's becoming this gambling. You've just attracted all sorts of these individuals that are just basically trying to scam other people, unfortunately. So, a lot of these good people got overtaken. The sector got overtaken by these other individuals and who started to turn it into a casino. And I saw that in the first bubble phase that I went through. I saw exchanges collapse. I saw the fraud behind it. I saw how these altcoin projects work. There's no business plans. They get a bunch of money. They blow through it. It was just all based off hype and marketing, and these projects were not developing or creating any value. So I thought that was going to be it for it. After that, I started selling Bitcoin when it was running up towards 20,000. I think I sold my last Bitcoins up there around 19,500. I went back fully into precious metals, and I realized that this thing became highly speculative. It didn't have the fundamentals to back valuations. The amount of fraud was just too prevalent, and Bitcoin wasn't turning into what we had hoped it would become. It was showing its problems and its limitations. So it was interesting to see how that whole sector kind of got collapsed, and a lot of these frauds came to surface. And now looking back from this last bubble phase we went through, it looks like it was just peanuts. We're seeing magnitudes of the fraud this time around, and it's just a shame because it's never about the projects. It's just about what the price is. It's like, how much can we pump up this coin? And people don't even know what these coins are. They just were going left and right and just making quick, easy money. And for the most part, most people just hold the bag, and they end up, some of these insiders are just dumping on these guys, and a lot of these retail and now this time institutional guys are taking massive losses. And now that the sector has really crashed, now it's starting to show the fraud, show what level of fraud there is, and with FTX, and we're going to see more exchanges now blowing up, and who knows? You got the question of Tether, and then you watch what Sailor is doing with MSTR and this leverage and this gambling. It's just a sign of the easy money times that it has ended, where the liquidity in the system is reversing, and this easy money has ended, easy credit. So crypto, boy, it just got way out of hand. The fundamentals aren't there to support the price, and for me, I realized that it's a totally different beast. It's not money. Bitcoin isn't money. It can maybe be used as a currency or whatever, but it's a decentralized network. It's a network. It's a way to do transactions. It has its own features, but it's not a very efficient. It doesn't really. It can't compete on the level unless you use this Lightning network, which is its own separate network, which has its other questions about it. So it's not working like it's supposed to do. And unfortunately, there's a window of opportunity for these crypto coins to kind of compete. And with the CBDCs coming along, I wonder if now this crash is going to be so bad that the sector is really going to recover. I still think there's a lot more downside to it. But for me, it just reaffirms my initial last bubble experience that gold and silver are stores of values, and crypto it's become a tool of speculation. And it really is. There's a lot of hope, what I call hopium involved. There's just so much uncertainty, and the valuations just don't justify it. There's still something like 50, 60 something coins with over $1 billion market cap. There's dozens and dozens and dozens more over 100 million market cap. And, I look at our mining sector and say, wow, there's this company's got $500 million market cap, and they're going to be producing 500,000 ounces a year. These guys are making real money. What's going on? Like, just from a relative valuation perspective, it just seems totally insane. I believe that we're in a different era now. We're transitioning to a period where risk is going to be avoided more and more. So, speculative assets and things like crypto, boy, they're not going to attract as much capital. And now looking at how many losses and how much fraud was involved, it's really going to burn a lot of people. And it's really unfortunate because the initial crowd that was there trying to build new tools and new networks and so on, it just got overtaken by a lot of these types of people that overtook it and used it for a different purpose.
Let's go to some of the audience here.
Sure. Yeah, there were some really nasty mergers back then, and they didn't create value. And there's been some recently too that's seen objections, and the share prices didn't react well. So I think for now you're not going to see it just at this point, but I think it's inevitable that when you get into a hot market, you'll see the larger companies trying to take over the smaller ones. And one of the drivers again for it is going to be the lack of reserves, that they're going to have to replenish the reserves somehow. You have a mining company like Newmont or Barrick producing several million ounces a year, and they're not replenishing fast enough, so they're going to have to make these moves. I think they're going to be more selective. And then there isn't a huge amount of selection out there already as it is. So there aren't that many options, but I think you'll see it happen more later in the cycle, not just right now. I think the last M&A was quite negative, and it didn't see the reaction it gave kind of an indication that the market doesn't really want to see that. That definitely puts some pressure. It supports the dollar, which is one of the biggest competitors to the gold price. Yeah, silver's got a little more interesting of a setup right now. It's having huge deficits. There's supposed to be almost a 200 million ounce silver deficit this year. And if you have China now coming back on, you're going to see more commodity demand and so on. But if the trend continues where central banks are a lot more worried overall about deflation, they aren't inflation, even though right now they're talking more about inflation. They don't want to overdo it. And I guess in the back of my mind, I'm still curious what caused Powell to start talking about slowing down the rate increases. What is he seeing? What are the true issues behind the scenes? And are they going to overdo it? Like you're saying, it is possible. And that isn't great setup for the prices of precious metals. For anything, things are going to deflation. It will drag the prices down. But I guess in the periods in the past where we had deflation in the 30s, the gold price relative to other asset classes still outperformed. So the gold price held up better than other asset classes. The Fed, I think everyone's trying to figure out what's happening next. I think the Fed is concerned about inflation, but they are more concerned about deflation. So they're going to get to the point next year where they stall. And if they start getting a sense of deflationary pressures are growing too much, if there's bailouts, some banks that need bailouts, there's going to be some debt collapse, some issues that way, they're going to have to step in and support that as they've done in the past, because once deflation hits, that's a lot more difficult to control than inflation. So my belief is these guys, even though there might be a period of deflationary forces, they'll come back and react in a very inflationary way. And it has some similarities back to the 70s, the stagflationary setup, although back then the US was in a much better situation, debt level wise, obviously a lot different today. But the inflation back then was going in waves. It wasn't always constantly raging. It came back down and then it had another spike. And I'm wondering if that's kind of what we're going to be seeing now, is that the inflation rate comes back off, where the CPI is now almost 8%, comes back down to say to 4 to 5%, and everyone thinks that they've got control of it. And then next year, sometime mid-year, it starts to rise again, even though the Fed has stopped raising rates. Well, what's going to happen then? Boy, that's a difficult position. And then I'm not 100% sure how they're going to play that out. I just think the question then comes down to a lot of investors: where do you hide? Dollars, gold, silver seem to be the go-to safe haven asset classes, but there's still lack of trust and confidence in fiat currencies. But for the short term, the dollar still seems to be okay.
Maybe for the final few minutes here, Peter, just because you interact with a lot of different people and this is your specialty, obviously, what do you find most people get wrong in their perception around precious metals broadly? Let's take it away from just gold and silver, but what are some of the misconceptions that you've seen?
Well, in viewing the price of gold, for example, you say the gold price went from $20 some an ounce in 1932 when we were taking off the gold standard to $1,800 an ounce. Well, I think the other way of looking at it is the dollar is 1/90th of the value of it, what it is. It's changed by that much since then. That the perspective is that you should be looking at the value of things through gold and not through the dollar. So gold is kind of the measuring stick. It is the way to view things. It is true money. It is a barometer of the financial markets. It has a lot of influences that affects its price. But as far as viewing fiat currencies, there's a lot of focus on the US dollar index. But the true measurement really comes down to gold. What is the value of the dollar? To me, I look at it through a gold perspective. And I think a lot of individuals, they're always saying, well, look how strong the dollar is. Well, yeah, the gold price is showing that the dollar's lost 1/50th or 1/51st of its value since we were taking off the gold international standard in the early 1970s, which is also that 50 some years ago. So that's one misconception. I think there's not in the West a lot of appreciation for gold as a store of value, because we do have the US dollar, which is it is like the gold standard in the world. So from the US perspective, the view of gold is a lot different than from, say, someone who lives in Turkey or other places in the world where they have high inflation rates. So they look at gold and they look at the dollar and other things as alternatives. But there's a cultural, I think, parts of the world really look at gold a lot differently than we do in the West. You see that in China, you see that in India, where you have the largest holding of gold in the world, which is mostly among Indian households. The women have some 25,000 tons of gold stored. So it's highly decentralized around the world. And it is a global market. We always look at it from the US perspective, but this is a global market. There's over 8 billion people right now, and there's some 6 billion some ounces of gold. So there's something like 3/4 of an ounce per person. So it really shows how scarce it is. So yeah, I know those are a couple things I guess I could say that some of the misconceptions, but I think it really one of the key points that you mentioned earlier and I had written down here is that gold, it comes down to trust. And where trust is starting to fade, gold plays a much larger and significant role.
Well, I trust everybody enjoyed this space. So thank everybody for being a part of this. Peter, glad we could finally make this work. I want to get you on with a couple of other gold experts in the months ahead. And everybody, if I don't see you, enjoy the rest of your day. Thank you, Peter. Appreciate it.